Hello and welcome to another update video about Bitcoin. This is going to be a bit of a longer one. I wanted to go through the different scenarios as we're heading into a new trading week, just to make you a little bit more aware about what's coming. What's coming next week and what could be happening. This is the movement that we observed here since June. Wanted to talk about the different potentials that we have on the chart here, the different scenarios, because obviously not too much happened here over the last few days, and I focused mainly on the micro price action. But from time to time, it's just important to look at the bigger picture so that also new viewers understand what's going on here. But before we dive deeper into the analysis, first a few words about the sponsor of today's Bitcoin video, Chartprime. Chartprime is a service that provides specific TradingView indicators. There are 5 specific and unique indicators that you can only get through Chartprime if you sign up to one of their plans. These are based on quite complex algorithms and formulas and can be helpful in identifying trade setups, which means they can provide additional signals that could support your trading. Indicators can, for example, also be useful to support Elliott Wave counts to give more confidence. Of course, you don't need to apply Elliott Wave to use Chartprime, and the combination of their indicators alone can provide trade setups and signals as well. They currently offer a 30% limited time discount, so if you are interested in this, check it out. Of course, bear in mind that no indicator works 100% of the time. Here's an example of the Bitcoin chart with one of the range indicators. This indicator combines various indicators in itself, so you can adjust it to your needs, but it basically shows your range resistances, different support resistance levels based on different time frames, and it categorizes them based on their relevance. And this indicator provides you with dynamic support and resistance bands to which the price is reacting. And if you're interested in checking it out, make sure that you use the link in the video description and on their website. You can also read through testimonials and you can join their Discord community, which you can join in case you have any questions about how to use those indicators. So let's start here on the 4-hour chart. Let's start with the preferred interpretation. So my view is still, and that is a leaning I have here, I'm leaning towards it, which doesn't mean I couldn't change my view. As I often say, the market is the boss, so it's not me to tell the market what's going on. It's the market that is telling us what to do, and how we need to view it. We just simply need to understand the language of the market. The prices are made. The prices are made by buyers and sellers. It's all about the emotions, fear and greed. Elliott waves help us to understand market sentiment. They support us in understanding and really understanding and making the language of the market understandable. We use Elliott Wave together with Fibonacci levels to put a mathematical pattern onto the chart, which gives us, a mathematical interpretation of market sentiment. And with the Elliott Waves, we understand where are we with regards to sentiment. Primarily, the Elliott Wave method is not there to predict market movements. That's a misunderstanding a lot of people have. It's not primarily there to predict. It is primarily there to calculate reward and risk. You need to know as a professional trader at any time where your risk sits. How much are you risking in any moment? How much of your portfolio is at risk at any time? And we do that by using the Fibonacci levels. We use that by understanding where are the invalidation points of the current scenario. That's exactly what Elliott Wave is doing. With Elliott Wave, we primarily track market movements, and we track the movements not because we primarily try to predict if a chart goes up or down or sideways, which is also a direction. It has an element of that, and of course, there are target projections and things like that. But primarily it is used to understand the different scenarios that there are. Based on these scenarios, we can develop our trading plan. We need to know all these scenarios, otherwise we cannot trade, because we need to know where could it go, where should it go really, and what are the probable outcomes. But based on that market tracking, we can produce trade setups, and they are really the output and the outcome of the analysis. A lot of people expect that we can say, okay, this is a triangle, for example, yeah, like Bitcoin is currently moving a triangle, it will definitely do this or that. No, because we don't have a crystal ball, nobody has one, and no method of analysis is going to tell you what the market is going to do with certainty. Yes, within the scope of probabilities, but then you still have, out of the infinite amount of possibilities that there are, the Elliott Wave method allows us to identify, let's say, 2 or 3 probable outcomes. And they are all likely. And I would never show you an unlikely count or an unlikely scenario. So all the scenarios I show you, they are actually likely. For a lot of people are overwhelmed by 2 or 3 scenarios, but honestly, think about it. The market can do anything, okay? So we have an infinite amount of directions and patterns the market can choose. The Elliott Wave method allows us to identify a few that are highly likely, and then we weigh them, yeah, compare them. Okay, this is a bit more likely than the other one, and that's how we get to our primary wave count. But the primary wave count isn't the one that necessarily needs to work out, because they're all probable, they're all likely. So that's why we have these colorful boxes on the chart. They tell us below or above which level we need to change our view. So hopefully that gives a bit of background. So let's start first of all, what's the preferred outcome at the moment? So very clearly at the moment we have a very clear uptrend, yeah, of the November lows, yeah. So hopefully everybody can see that we're making higher highs, we're making higher lows. It's a very clear upwards trending structure. So logically we are focused on the upside. Anybody who's currently not focused on the upside doesn't understand the trend. Trend can always change. Yeah, that's why we manage risk. But for now, we can only trade and analyze what we see, and the trend is clearly up. We broke above the August highs, and that's why I'm focused on the upside. We identify an impulsive price move off the lows here. Some people ask me, what is this? This doesn't look impulsive. That's correct. The move down here doesn't look impulsive, but it's a diagonal pattern. So we had a wave 1 to the upside in November to December, a wave 2 down, a wave 3 up, 4 down, 5 up. This is a 5-wave move. Yeah, this is the first hint that we have that the trend has shifted upwards. Yeah, we then were looking at a pullback in a wave 2 from somewhere here that occurred. It turned around in our trend reversal area here between 17,590 and 20,400. This was what I consider a wave 2 correction, a wave 1 up, a wave 2 down. Yeah, we have a 5-wave move up and a corrective move down, which means we focus on the upside. Does it mean bear market lows are gone? No. Or the risk is gone? No, absolutely not. The risk is still very much there. All we have at the moment is an impulse up and a correction down. That is not enough to say that we will not get new bear market lows, but it is enough to say that we focus on the upside at the moment and that the risks for another bear market low have decreased. But primarily, this is a wave 1. This is a wave 2, and as long as these setups are holding, we can focus on the upside. Based on that, we would expect to be now in a 3rd wave in the primary count, and that would unfold as 5 waves again. 1, 2, 3, 4, 5. So that would be another 5-wave move that could take us to 40K and beyond in a 3rd wave. This is really just a bigger picture, okay? But within this wave 2 of wave 3, we can go a bit deeper. That's currently the expectation. But then again, we would need to look at the lower time frame because there are again 2 scenarios or so. So this wave 2, for example, in which we currently are, can unfold in different ways. So this is the bullish count. Yeah, I'm tracking it at the moment. Doesn't mean this will certainly play out like that, but it is at the moment working, and we can use it for trading. It's tradable. It produces tradable setups. I have a hard time to believe that we really are already in a bull run. It could just simply be an extended bear market rally. Okay, but this is currently the primary count. There is then, of course, a different one within the bullish perspective. That would be that we rallied off the low in a wave 1, as indicated, a wave 2, a wave 3, but all of this here was a wave 4 in an ABC, and this was a wave 5. We would then, based on that, allow for a deeper retracement. It's not much different, that count, from the first one I showed you, but just a little bit deeper in terms of its retracement. We would then do something like that and probably come below the yellow support area, which is relevant for the first count I showed you, and goes down to 22K. So here in this one, we can go a bit deeper, which is why I sometimes say that even if we break below 22K, yes, I will get much more concerned about new bear market lows, but there is still another bullish option. These were the two bullish options. Now let's talk about the bearish ones. The bearish one indicates that we had a WXY. Yeah. In this Y wave, we had an A, B, C. It would have been a short C, and we would now break down and make new bear market lows. Of course, it's still possible. Does it make sense to focus on it? No, because we're currently holding bullish support. Yeah, I'm very much a friend of, analyzing and trading what we see. To try to focus now on new lows just means we're ignoring the current trend, and we're ignoring the current structure, which is clearly up, and we're ignoring a crystal clear impulse that happened to the upside. And we cannot ignore the bearish count. That's why we need to consider it still for risk management, but it just doesn't, it's not so useful for trading. Yeah. And, it would just feel like if we focus on it, we would just try to fit the chart, our bias, which we don't do. Okay, so this is sort of bigger picture. Now let's go into the detail here. And based on the structure, we said that we rallied obviously in a wave 1 here to the 14th of April high, and we're now coming down in a wave 2. And in this wave 2, we are looking at an ABC structure. So the question just now is the wave B unfolding as a triangle, or is it going to be just a classical ABC structure in wave B, or WXY? So because B waves are such, diverse waves, they can do different things. We won't know in advance, but we can label the current structure, and that gives us some invalidation points. Also, we can combine it with some education. But currently the idea is that eventually we come down a little bit lower in a wave 2. And as long as we're holding 22K, this scenario is valid. It's just now a question, how does it unfold here on the lower time frame? Please bear in mind that these wave counts on the lower time frame change frequently. Here the point is, as long as we're holding this 30,050 level, the A wave high of the triangle, so a triangle unfolds. Basically, the B wave would be the triangle. That's currently, I would say, the primary on the lower time frame here within the larger scenario. So just for example, if this triangle now gets invalidated, it wouldn't change a thing on the larger time frame or the larger degree pattern. A triangle like that would unfold in 5 waves: A, B, C, D, E. After the spike that occurred here today, I made a video and I highlighted to you that I don't see any change, or I don't see any need to change the count yet. I will leave the triangle intact just because we don't have enough evidence that we broke out or breaking out, and that was so far the correct decision. It looks like a bit of an extension of the triangle here though, and I wanted to just label for you the subwaves of the C wave, because that might just be complete. And I'm watching here for a possible WXY structure, and within the Y wave, similar to the Ethereum count, we had here a small A, I would say probably B and C. Yeah, and the B wave is a triangle, C wave up. I'm going to take that off the chart again because it just doesn't help us much, but just to highlight how the count is. Next, we could see a D wave down and an E wave up, and then a break to the downside. This is just purely to track, when could the triangle be finished. We have technically enough waves already to count the triangle complete, but it just doesn't have the right look in my opinion. And if we get a D wave, what would be the ideal target for the D wave? For that, we take the length of the B wave, we go to the high of the C wave. Very first level we need to watch out for is 28,860. That is the 38.2 extension. Second level is 28.2K. That's the 61.8 extension. Yeah, so it's something like that. Okay, and it doesn't mean the price needs to go there, but there are certainly levels to watch in a triangle. Yeah, and then we wait for maybe that E wave to finish and then the triangle to break to the downside. If the triangle really breaks down, it would be a very swift move. Yeah, so far I can't see that yet. And if the triangle breaks to the upside, it would count as a higher B wave. It would still be the B wave, it's just the way how the triangle unfolds would be different. All right, and that's my update about Bitcoin. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.